You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 2nd of July, a new month, 2018. It is great to be with you. Our book is available, Charting Your Way to Wealth. If you're receiving our email, then please do look in the comment section. You will see there is a place there where you can order the book. You can also find it at our YouTube channel and at the website chartingwealth.com, where we post all of our daily reviews and our comprehensive review and forecast. You'll see a link there also. If you buy our book, of course, you will get the definitive guide to how we do what we do at chartingwealth.com, particularly our two methods of jumping into trades or investments. And again, we're not a stock calling service, we're an education firm, so we want you to practice and then combine all the knowledge you gain and put it to good use when you feel comfortable spending your own money. But we want you to practice trade in the meantime and practice what we teach on a daily basis. Also, if you buy our book between now and the 15th of July, guess what you're going to get? You're going to get a special training we're putting out just to the purchasers of the book on short chart trading using the 2-hour chart, the derivative oscillator, and the price percent oscillator to spot new emerging trends. And we've got a great training coming up for all the purchasers. And that is the folks who have already purchased the book. We're on our 3rd printing, and all the folks that purchase it up until the 15th of July. Now, important news. If you are a subscriber to our daily market review, which includes our comprehensive review and forecast, we are going to be sending out over the weekend, we'll be sending out our special quarterly chart training, because this is the last day as we record this on Friday, the 29th of June. This is the last day of the 2nd quarter, which means, of course, that we will be putting out our quarterly chart training for the 2nd quarter, and interesting, very, very interesting things for you to watch. The important thing to understand about the quarterly chart, and we use the quarterly chart on the S&P 500. Why? Because if you go back over 20 years, our chart would have gotten you in the market, would have gotten you out of the market actually in the year 2000. So you didn't go through that crash, would have gotten you back into the market in 2004 to ride that up, would have gotten you out of the market in 2008. So you didn't ride the market down, and would have gotten you back into the market in 2011 for the run up. And of course, we had a quarterly crossover going up back on the third month, I guess that would be the 2nd quarter of 2017 after the Trump effect. And we'll talk about all those things. And that special training we will record and be putting out this weekend. So if you are listening and are not a subscriber, you need to go sign up so you get it. Now, let's jump into how this current week ended up and what we might be looking at over the shortened trading week this next week. Don't forget, Tuesday is going to be a shortened day, and the markets will, of course, be closed on Wednesday, which is the 4th of July. Hopefully, you'll be out celebrating. Now, when we look at what happened over the course of the day on Friday, it was an up day for stocks, it was a down day for bonds, and it was an up day for gold. But let's look at the whole week first on our weekly chart. We do not have a crossover, do not have a weekly vertical crossover going down, although on the S&P 500 it was a down week. And again, a decently down week, actually, after a red spinning top in the prior week, which meant indecision tending down. Well, we saw that indecision turned into down decision. Of course, we had pushed through the weekly trend line, and the market was down overall for the week with a nice wick on the bottom. And we see the derivative oscillator losing energy, price percent oscillator headed down. We go to the 2-day chart. What do we see? Well, it crossed over going down back on Monday the 25th, and things just continued down throughout the week, and again ended with a down 2-day candle representing Thursday and Friday. Price percent oscillator headed down, derivative oscillator headed down. We look at the 4-hour chart. What do we see? It is rather interesting because, of course, we had a bit of an up movement in the day at the end of the day on Thursday rather, and then Friday morning was a bump up, a little bit of a rollback in the afternoon. Again, the S&P 500 up 0.14%, did not cross over going up, but we questioned whether or not we were going to have a bottom somewhere around the 270 mark. Maybe we do, maybe we don't. We shall watch as the week starts. We did see the derivative oscillator flip over into the positive. Price movement is still below the 2-day trend line, so keep your eye open for that. As we get into the week, we don't have a trade on the S&P 500 because the weekly's up, the 2-day is down, the market is in flux. Okay, what's going on the Qs? QQQ, that's the Nasdaq 100, the tech stocks. Of course, we have a red open box candle that prior week. And what did we see over the week? This past week ending Friday the 29th of June, the last week in June, where we saw again, just like the S&P 500, a down week, not quite as strong on the Qs. We see the derivative oscillator losing momentum after a week up, actually, in the prior week. It lost momentum this week, first time in many weeks. And we also see that the price percent oscillator is headed down, but not as close to crossing over going down as we saw in the S&P 500. We look at the 2-day chart. What do we see? Well, it crossed over going down back on the 25th, and again, stair steps heading down, derivative oscillator gaining lots of momentum. Price percent oscillator, not as much, but again, heading down. We look at the 4-hour chart. What do we see there? Well, again, sort of bouncing off there, off a bottom, and pulling back a little bit on Friday afternoon. But again, hasn't crossed over going up. Haven't seen the derivative oscillator go from red to green, but look like it's getting close, and we shall, again, watch and wait and see if the market has hit a bottom or if it's just resting, reloading to keep moving down. So we'll keep an eye on things. Same kind of schizophrenia we have going. We have the weekly going up, 2-day down, and of course we had 3 weeks of really nice up movement after that weekly vertical crossover, 2 on the S&P 500, and we had nice virtual trades, making some nice virtual cash on those 2 indexes. Now we're going to stay on the weekly. We're going to go from stocks to bonds. TLT, 20-year Treasury bonds. Remember, it crossed over going up back on the week ending the 25th of May. Had a big up week that next week ending the 1st of June, and then the following 2 weeks in June were just really sideways slides. But these last 2 weeks, nice up movements, although we did see a bit of a pullback on Friday, just 0.34%, but again, a nice green up candle. Derivative oscillator gaining momentum. Price percent oscillator spiking up. We see on our 2-day chart, again, continued nice up movement above the 2-day and the weekly trend line. Another nice green up candle. Derivative oscillator gaining momentum. Price percent oscillator heading up. And on the 4-hour chart, we were wondering, are things topping off? Well, they popped up in the morning and then rolled back in the afternoon with a doji, almost a doji, spinning top doji, very close, means indecision, tending down. The price percent oscillator kinked over going down. Derivative oscillators losing a lot of energy. So just wait, watch, and see what's going on bonds. If you jumped in, again, we had some caution there. If you jumped in heading up on the 25th after we had the pullback, then the crossover going up, you've done quite well. Your jumping in point somewhere around 121 or so. And again, up just about $1. So, and that was in, what, 2 days, 3 days? So just watch, see what's going on. You don't want to lose the $1 or so that you've gained over just the last 3 days. So just pay close attention, see what bonds do as the market opens on Monday if you are still in that trade, if you took that position. And that's where we are on bonds. Lastly, we go to gold. Gold was up for the day on Friday. Of course, a big down week. Gold has been going down since, well, since it did cross over going down, and we didn't have a jumping in point after that occurred back in mid-March, because it went up for the next 4 or 5 weeks. Then in earnest started moving over going down back on Friday, the week ending Friday the 27th of April. and has been going down, but for 2 weeks over that entire time period, many, many weeks, accelerating on the derivative oscillator heading down, price percent oscillator heading down, nice big red candle, probably the biggest we've seen in a while. So the weekly chart continuing to head down. 2-day chart, of course, crossed over going down back on the 15th. And we have, 5 candles connected on a nice trend line heading down, derivative oscillator gaining momentum, price percent oscillator heading down, price movement well below the weekly and the 2-day trend lines as they continue down. And of course, on the 4-hour chart, we have seen things perhaps bottom out a little bit around the 118.25 mark or so. And again, wondering if that is just a temporary hiccup or if things are going to go all the way down to where they bottomed out at about 117.50 or so. We will just have to wait and see. We saw things move up on the day on Friday, 0.36% on gold. Had a bit of a doji in the morning, and then up movement, a green open box candle. Not a huge one, but again, an up move over the course of the afternoon. Derivative oscillator losing momentum. Price percent oscillators heading up, hasn't crossed over. Just keep an eye on things. It could just be taking a breath as it did back in the afternoon on Thursday, the 21st of June through the afternoon on Friday, and then Monday, this past Monday, the 25th of June, things started off going down in earnest. So we could be a repeat of what we saw in the prior week. So we'll just keep our eye on things and see what happens as the market opens. We're hoping for a bit of a pullback, so we'll have a jumping in point. Again, remember, we want to see the 2-day and the weekly moving in the same direction, then a pullback on the 4-hour chart, and then when it rolls over going in the same direction, we can jump in. Folks, that's where we are as we wrap up the week and get ready to go into the shortened 4th of July week. And again, if you've not already purchased our book, please do so. We've got a special treat for you in mid-July. We're going to give you that short chart trade training. And we also have available that we're going to be putting out to all of our subscribers, and that's free. You just go to chartingwealth.com and sign up, and we will be sending out over the weekend our quarterly chart training. And again, chartingwealth.com is the website. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.